Hello and welcome to Profit This Week, your weekly guide to the world of business events and developments with context and value-added insight. I'm Bianca Ghose, and here's what made headlines this week. Factory output as measured by the Index of Industrial Production contracted in March to a 5-year low of 3.5%, driven by a sharp fall in capital goods. Pranab Mukherjee announces that GAR will be deferred by 1 year to FY13. Foreign institutional investors welcome the announcement as the FM halves capital gains for PE funds. Changes in the finance bill bring in no relief for Vodafone. The finance secretary says that there is no chance of a penalty waiver for Vodafone. The rupee inches up slightly in the later half of the week after the RBI intervenes. Exporters will now be required to convert 50% of their foreign exchange holdings into rupees. And political uncertainty continues in France as President-elect François Hollande wants more government stimulus, and Greece's political impasse has raised the possibility of another election. It's not as if India's policymakers needed another wake-up call to understand how grim the situation in the economy is. But the latest industrial production figures show a contraction of 3.5% year-on-year, that in the month of March, as opposed to a growth of 4.5% in February. While that's an addition to the long list of exhibits to prove that India's economy is indeed sputtering and needs serious policymaking resolve. The country's industrial output unexpectedly fell in March for the first time in 5 months. It was driven by a slump in the capital goods sector, which saw a degrowth of 21%, manufacturing, which constitutes about 76% of industrial production, that shrank 4.4% from a year earlier. The mining sector degrew 1.3%. Consumer goods, however, that was the only bright spot this month, growing 0.7% vis-a-vis a negative 0.3% in February. Capital goods fell back into the negative zone due to a weak investment climate and also due to a strong adverse base effect. Growth in basic and intermediate goods also came in much weaker than the previous month. Now, economists we spoke to on Friday said that the RBI may not cut rates just yet, depending only on the latest IIP figure. But here are the reactions of the Finance Minister and Montek Singh Ahluwalia, who is the Deputy Chairman of the Planning Commission, on the weak IIP data.
The overall growth is estimated at minus 3.5% for March 2011. The cumulative growth for 2011-12 stands at 2.8%. as against 8.2% in 2010-11. Part of the dip in growth explained by the base factor. However, the revival in manufacturing in the last quarter of 2011-12 has not materialized as anticipated.
The IIP numbers are disappointing, and I think they point to the urgency of trying to do more to get the economy back on track. Now, I think many things have to be done. We are discussing with people, trying to push in the right direction, and I think if we take all those steps, we will get a better performance in IIP.
The government has delayed by a year the rollout of measures to crack down on tax evasion, known as the General Anti-Avoidance Rules, or GAR in short. The implementation of these rules have been delayed till April 2013. Now, the postponement of this, it's the latest in a string of delays and reversals by an embattled government that has been accused of policy paralysis. But at least the announcement, it has brought some temporary relief to the stock markets and also to overseas investors. Sapna Das reports.
To provide more time to both taxpayers and tax administration to address all related issues, I propose to defer the applicability of GAR provisions by 1 year. The GAR provisions will now apply to income of financial year 2013-14 and subsequent years.
Huge relief for the equity market coming from the Finance Minister Pranab Mukherjee in Parliament today. The controversial General Anti-Avoidance Rules, or GAR as popularly known, has been deferred by 1 year. Initiating the debate on the finance bill, the FM in his introductory remarks said, that the GAR provisions will now apply from financial year 2014 onwards, and removal of providing proof from the taxpayer to the Revenue Department before initiating action. The fear of introduction of GAR from 1st April 2012 had spooked investors, while FIIs turning net sellers at 1,000 crore rupees in the month of April. But that's not all. There is relief for private equity funds and angel investors as well. Long-term capital gains on private equity funds halved 20% to 10%, a move to bring private equity funds on par with foreign institutional investors. However, sale of unlisted securities in an IPO will attract STT of 0.2%, while exempting tax on long-term capital gains tax on sale of unlisted securities. But confusion over the other contentious issue of retrospective tax amendment continues, with the FM not clearly indicating whether any major changes in the proposed tax amendments will be tabled or not.
The retrospective clarificatory amendments are now under consideration of Parliament, will not be used to reopen any cases where assessment orders have already been finalized.
While there is speculation that the rate of taxation for Vodafone-like cases will stand reduced, Finance Ministry officials have indicated that no major changes are expected to be proposed in the Minister's reply after the debate to the Finance Bill is over. If that is true, then the clause on the retrospective changes proposed in the Finance Bill will be the only clause on which the government will be sticking to its guns. In New Delhi, Sapna Das, NDTV.
Well, overseas investors may have been mollified, but Monday's changes to the finance bill do not appear to give any respite to Britain's Vodafone, which India wants to tax over its 2007 acquisition of Hong Kong-based Hutchison Mobile's operations here in India. Now, Finance Secretary Mr. R.S. Gujral told NDTV that the government will take action on Vodafone as soon as the finance bill gets the President's approval, and there's going to be no question of a penalty waiver.
The Finance Minister's reply yesterday on the Finance Bill was extremely clear, especially in terms of the tax issue of Vodafone. So what is the road forward now, especially in terms of the revalidation of the tax demand, and also, sir, what happens to the penalty issue that is being discussed?
I think you are jumping the gun. Let the Finance Bill be passed by first the Rajya Sabha, thereafter the Presidential Assent, and then only can action be taken further.
So what would be the modus operandi like? I mean, if you could just share your thoughts on that one, what's the procedure like? Because, you know, there's a talk about an issue of a fresh notice, but we're also saying that probably we don't have to do that. It'll just be a revalidation of the earlier tax demand. So, I mean, your views.
No, Finance Bill, the amendments, they themselves have a validation clause. So based on that, whatever has been the demand which has been raised for such an issue, that stands validated. Consequently, the demand, the interest and the penalty, those orders would stand validated. So once the finance bill is passed, thereafter, perhaps the show cause notice would require the interest amount to be updated, because the interest calculation was up to an earlier period, and thereafter it will have to be taken forward.
Right, sir. So what is the breakup that we are looking at in terms of the basic demand, the interest and the penalty? I mean, approximate numbers, sir?
I think the basic tax amount is 7,900 crores. The penalty is an equivalent amount of 7,900 crores. And interest which had been computed at that point of time was 4,300 crores. So it's likely about 20,000 crores. If penalty is updated, it may add a couple of hundred crores more.
Meanwhile, Vodafone has hit back at the government's decision and said that the government had no legal basis to withhold tax when the deal was being executed. The world's largest telecom company said that it will work to safeguard its shareholders' interests and that it is studying the amended legislation on the tax. Vodafone has renewed its commitment for its investments in India, adding that it has invested over 50,000 crore rupees in the country since it set up shop here in 2007. The rupee this week saw a lot of seesaw movements. On Wednesday, it closed at an all-time low of 53.84 against the US dollar, but it rebounded sharply after the RBI stepped in with measures to stem the fall. The RBI has asked exporters to translate 50% of holdings in overseas EEFC accounts into rupees in the next 2 weeks, and mandated also that 50% of future forex earnings must be converted into rupee. Now, the central bank has also asked banks to restrict the net intraday open positions in order to stem speculation in the currency markets. Here's what happened in the rupee this week.
The rupee has been on a slippery slope. With the weakening macroeconomic fundamentals, currency traders are now betting on the rupee losing further ground despite the RBI intervention. The RBI move came after the rupee closed at its lowest ever at 53.83.
I don't see any corporate treasurers blocking the export realization at a 0% EFC account. So I don't see a great impact from this EFC move.
With the rupee nearing its all-time low, the RBI had to step in for the second time in 2 weeks. The central bank has asked exporters to convert 50% of their dollar holdings over the next 2 weeks. Only half the future forex earnings can be held in exchange earners' foreign currency or EEFC accounts. Companies in the IT, textiles and jewelry sector would be impacted by the RBI move. That is expected to add up to $3 billion to the forex kitty during the next 2 weeks.
So even in the past, we have seen that RBI intervention per se may not be very significant quantitatively, but definitely does help to tell the markets that the RBI is concerned about what's happening.
Expecting the dollar to strengthen further, there is fresh demand from banks. FCCBs worth over $3.5 billion are due for redemption during the second half of the year. That could keep up the pressure on the rupee in the coming months. NDTV Bureau Report.
Well, the week saw some big-ticket earnings shaping market momentum, and I'm going to highlight some of the top results for you. Housing Development Finance Corporation, or HDFC, on Monday posted a 16% growth in net profit in the fourth quarter on the back of higher core income. Total income rose about 30%. Gross non-performing assets to total loans stood at 0.74% for the whole year as against 0.77% as reported in the same period a year ago. Now, this is the 29th consecutive quarter end at which the percentage of NPAs has been lower than the corresponding quarter in the previous year. Renu Sood Karnad, Managing Director, has said that loan growth was driven by the Delhi and the Chennai circles.
Well, I guess it's been a good demand for loans, and we've had, except maybe for Bombay, where we didn't see much of a growth. But some of our other geographies, Delhi, Chennai, we've seen a lot of growth there, and the loans that have come in are in the last whole year, and it's been a consistent growth throughout the year.
India's third largest private sector lender, Kotak Mahindra Bank, reported a 19% year-on-year growth in its standalone profit after tax in the fourth quarter. Gross non-performing assets increased at 1.56% for the January to March quarter versus 1.52% in the previous quarter. Now, net interest margins improved at 4.8% versus 4.7% quarter on quarter. The chairman and managing director of Kotak Mahindra Bank, Mr. Uday Kotak, he told us that the flat growth in net profit is due to higher growth in advertisements coupled with challenging environment faced by securities business owing to market conditions.
Our CASA ratio is 32% as of 31st March, and this is a pretty healthy growth over last year, and we have also found a very significant traction to our savings deposit scheme, and the savings ratio also has improved. In the last quarter, in one quarter, we've added 163,000 new customer accounts.
Aditya Birla Group flagship company and aluminium major Hindalco Industries on Tuesday reported a 9.6% drop in fourth quarter net profit compared to a year ago, and that due to low aluminium price on the London Metal Exchange and a steep escalation in the cost of production. Though aluminium sales increased 13% to 2,499 crore rupees, EBIT, that's earnings before tax and interest, that was down 9% to 484 crore rupees. Now, Debu Bhattacharya, who's the managing director of Hindalco, he said that the pressure on the LME is going to continue and margins will remain under pressure.
Also saw, as you all know, a sharp slowdown in India, particularly in investments. And if investments come down, so does aluminium consumption in more than one ways. And therefore, aluminium consumption also saw a slower growth than what we had seen in the last couple of years.
India's largest drug maker by sales, Ranbaxy, beat market expectations with a four-fold jump in first quarter net profit, driven by sales of its generic version of Lipitor, which is also the world's best-selling medicine. Net sales jumped 71% to 3,786 crore rupees. Results were, of course, also boosted by forex gains of roughly 350 crore rupees. Now, Ranbaxy's CEO and Managing Director Arun Shawny has said that the focus on key products and markets while maintaining emphasis on further strengthening quality and compliance standards, that has had a positive impact during the quarter. But even as private lenders did fairly well, the likes of ICICI Bank, etc., public sector banks have had it rather tough as far as asset quality goes. Restructured loans have continued to soar for public sector banks. In fact, in the quarter that's gone by, restructured loans for most public sector banks have risen by over 100%. Why so, and how long is this going to continue? Shefali Malik explains.
After battling high inflation, which continues to be a concern, RBI cut repo rates during its April monetary policy. But it's too soon and too little to help the banks. The worsening asset quality is now clearly visible in the fourth quarter earnings of banks, with the government banks being hit harder than the private sector banks.
The pressure was mainly because of some of the slippages were slightly, of course, we expect around 840 crores in slippage during this quarter. And otherwise, the profit, if you see year-on-year profit is, of course, is much higher. It is expectations. We could make 22.30% year-on-year. From 907 crores last year, it was 1,109 crores this year.
What gets hidden beneath this headline asset quality is the amount of loans or assets which have been restructured. Fresh restructuring of loans by Dena Bank in the fourth quarter rose 525% compared to the last quarter. For PNB, incremental restructuring jumped 336%. For Indian Bank, 327%. For Central Bank, which was a shocker for the market, fresh restructuring was 115% higher on a sequential basis.
You know that we have a large exposure on various state discoms, and those discoms exposures we had to, of course, restructure and take the provisioning hit of 2%. There was a big telecom account which has been restructured on a tower company which has gone into big hit for the bank. And besides various accounts on the steel sector, aviation and couple of other manufacturing sectors. But I think it is the right way that you support the accounts at a good time and try to come out of the situation.
Public sector banks have seen several instances of restructuring of loans, be it to Air India, some large corporates like GTL, and not to forget the state electricity boards.
Definitely would restructure, because restructuring per se I feel is not bad, because if some account, if we give a little more repayment period, I think nothing wrong in that as long as account remains healthy.
Rating agency CRISIL estimates restructured loans to touch 2 lakh crore rupees by the end of the current financial year. The worries for the banking sector may not be over in a hurry. In New Delhi, Shefali Malik, NDTV Profit.
Global triggers in the week gone by remain bleak, with the political standoff in France and in Greece having reignited concern that Greece could fail to meet bailout terms and force an exit from the Eurozone. But Greece's political impasse has raised the possibility also of another election, while in France, President-elect Francois Hollande wants more government stimulus and more government spending in general. Let's recap for you what happened in France and Greece this week and why the political impasse continues. Socialist Party leader Francois Hollande defeated incumbent Nicolas Sarkozy in last Sunday's decisive presidential runoff in France. Hollande is France's first left-wing president in 17 years, and his win marks the end of Sarkozy's 5-year term. Hollande has promised to start a pushback against German-led austerity policies. Addressing tens of thousands of jubilant supporters at a victory rally in Paris, Hollande said,
Le 6 mai doit être une grande date pour notre pays. Un nouveau départ pour l'Europe, une nouvelle espérance pour le monde. Voilà le mandat que vous m'avez confié.
Sarkozy is the latest victim of a wave of voter anger at government spending cuts around Europe that have tossed out governments and leaders over the past couple of years.
Mais je n'ai pas réussi à faire gagner les valeurs que j'ai défendues avec vous et auxquelles je suis profondément attaché. Je porte Je porte toute la responsabilité de cette défaite.
Hollande promised help for France's downtrodden after years under Sarkozy, a man many voters saw as too friendly with the rich and blamed for economic troubles. Hollande inherits an economy that's deep in debt. He wants government stimulus and more government spending in general, despite concerns in the markets that France needs to urgently trim its huge debt. Hollande plans to slap a 75% tax on income of more than €1 million. The political impasse in Greece continues. Over the past week, Greece seemed to be moving closer to a second snap election. On Tuesday, leftist candidate for Prime Minister, Greece's youngest leader at the head of the left coalition party, Alexis Tsipras, received a mandate to try and form a government, and he immediately renounced the bailout and threatened to nationalize Greek banks. Antonio Samaras, leader of the conservative New Democracy Party, which finished first in Sunday's election, said that Tsipras would drive Greece out of the Eurozone with his demand that pledges made in exchange for an EU-IMF bailout be torn up.
Ο κύριος Τσίπρας, με την καταγγελία της σύμβασης, ζητά κάτι εντελώς διαφορετικό που απομονώνει την Ελλάδα από παντού. Δεν μου ζητάει να αποσύρω την υπογραφή μου, μου ζητάει να δεχθώ την έξοδο της Ελλάδας από το ευρώ και τη χρεοκοπία της χώρας. Και αυτό δεν πρόκειται να το κάνω.
Tsipras has demanded that Samaras and socialist PASOK leader Evangelos Venizelos tear up their €130 billion bailout deal with the EU and the IMF. On Friday, the mandate to form a Greek government passed on to Venizelos, who is now pressing for a unity coalition. Venizelos is expected to press counterparts on a proposal for a unity government that would avert a new election. The stalemate continues. NDTV Bureau Report. Meanwhile, the European Commission report released this Friday shows that Spain will have to approve big additional savings this year and in the next as well if it is to meet the ambitious deficit reduction targets, as the Spanish economy will be in recession in 2012 and 2013. In its twice-yearly economic outlook for the 27-nation European Union, the European Commission has revised sharply downwards its economic growth forecast for Spain to a recession of 1.8% this year from a 1% contraction that was earlier forecast in February. Spain has vowed to bring the budget's shortfall down to 5.3% this year from 8.5% in 2011. So those were the big news developments of the week, and some of them promise to run into the coming week as well with further twists and turns. Be sure to tune in to NDTV Profit for all the latest updates. Thanks for watching.